Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. To all of you out there, once again, best wishes to you, your family for health, wealth, prosperity, Ganesh Chaturthi, of course, and of course, the festival continues. Mood of festivities out there in the street. Here, of course, as we begin this session, there is that tariff bit, an obstacle which I hope gets dealt with sooner than later, but you've got to go through the pain. I think that's the message this morning here. I'm Prashant, with me my colleague Surabhi and Mangalam. Guys, hi, good morning.
Hi, morning folks. And also, while of course, happy festivities to everyone out there in all parts of the country, actually, not just Maharashtra. It is very much a Maharashtra and Mumbai festival. But I've seen the fervor build in Delhi, for instance, over the last couple of years. So happy Ganesh festivities to all. But also a word of prayer going out for a lot of people absolutely devastated by those landslides, those flash floods in J&K, in Punjab, in Himachal. Heart-wrenching visuals coming in. Hopefully, things get back on track.
Hopefully things get back on track. We always say that Ganesha is the remover of all obstacles. So yesterday I said, may your roads be pothole-free, may your portfolios be drawdown-free, may your health be worry-free, may your relationships be extremely happy and worry-free as well. So those are a couple of things that we pray for. At the same time, we're looking at an important day today. Why do I say that? Because it's the August series expiry. But more importantly, it's probably the last time we'll say that it's the August series expiry on a Thursday. This is the last Thursday NSE expiry. From September series, you have expiries on monthly expiries on Tuesdays.
Tuesdays, right?
Yes.
For the Nifty, yeah.
Yeah, so, a bunch of things, and we will talk about all of this. We'll talk you through all of this as we sort of go on over the next 2.5 hours. But let me just quickly begin the session with what you need to know. And, I just wanted to start with the basic numbers in terms of what comes our way, right? This is the impact of the 50% US tariffs on India. 2024, Indian exports to US were tariffed at 2.5% average. As of the 7th of August, when it was 25%, the effective tariff was 19%. And 27th of August, with the 50%, which is kicked in yesterday, the effective tariff is 34. The effective is lower than the 50 because there are exemptions. That is the reason why the effective tariff, some say 34, 33, 35, but that's broadly how it's moved. So effectively, Indian exports to the US now tariffed at an average rate of 34%. And by the way, this is one of the, with the harshest regimes in terms of where we stand, right? Just look at it. China is at effective 42, India is at effective 34. We're at number 2 around the world. We're pretty much neck and neck with Brazil, which is at 33% or so. That's the other point. Now, the impact of, and we'll sort of, we've been getting you so much opinion across sectors, etc. But India would be at a severe disadvantage, competitive disadvantage in pretty much all sectors, in terms of exporting sectors to the US. It's basically, and I said this on day one, 50, you can stack another 20, but basically it's a trade embargo at 50% because the competitiveness completely goes away. You can't pass on those kind of price increases across the board, even for things which are substitutable. Sectors most impacted, nothing new. Textiles, gems and jewelry, machinery, chemicals. And remember, while markets have kind of, if you just look at it, right, YTD markets are higher. The Nifty is up, I think, 3-4% or so. Even from the point of when that first 50% was talked about, markets are higher from that point on. So it's not as if the markets have sold off. But a large portion of the impact is outside what is the listed universe, right? And these are all labor-intensive sectors. And that is the reason why the secondary implication of this in terms of loss of incomes, and that feeds through consumption, through the banking system, and so much more, which we will talk about as we kind of go through. Help from the government needed. I think the answer, if you talk to people in these affected sectors, is absolutely yes. So maybe a dedicated revival package, for example, what we saw during COVID, right? Garments, textiles, carpets, footwear, jewelry, dedicated schemes basically to help these sectors. Reinstate the interest equalization scheme aimed especially at MSMEs. Perhaps GST reforms, of course, are coming. Will we see a sort of, upping the exemption limit and again, aimed at the small businesses, etc. Again, something which we will keep talking about, but I think it's an important one which we are hearing from the industry in many of these sectors. Now, just three comments, right? And the 50% I still maintain, I said this on day one, is not permanent. It's just about the fact that we've got to go through this pain, and hopefully this pain is not very long and something gets done and this 25% is knocked off. But we heard from three people, the US Treasury Secretary, and those comments I'll just quickly put those up. That's Treasury Secretary Besant, ending that comment by saying that at the end of the day, we will come together. Peter Navarro, US White House Trade Advisor, saying, well, India can knock off 25% if it stops buying Russian oil tomorrow. That's Navarro. And of course, Kevin Hassett saying, well, if Indians don't budge, I don't think President Trump will. Basically saying that India has to move first and then Trump will. But ending by saying there's going to be ebb and flow before we reach the final position. I mean, essentially, what I'm trying to get at, both Besant and Hassett, and we've heard from all these gentlemen earlier as well, this is not the final position. 50% absolutely is not the final position, and this will get negotiated, hopefully, as I said, sooner than later. Just not very much to take you through in terms of Wall Street. You're going to react to 2 days of action, but the action is not too much. Wall Street up a little bit, the yield down 4, dollar index almost unchanged, oil prices down about 1% or so. And that kind of quickly gets me to the market here, specifically in terms of where we stand. So on the last session, which is Tuesday, we overlapped on the downside. We overlapped the previous high of, which is the 12th of August, which is 24,702. Immediate downside level is 24,465 and then 24,337. These are the two supports that I'll be watching for. Resistance comes in at the 20-day moving average, which is the 24,739 level. For the Nifty Bank, which has broken the previous low, supports come in at this gap zone, which I put out on Tuesday as well, 54,055 to 54,442. And resistance comes in at the 20 hourly, which is 54,989, and the 40 hourly exponential, which is 55,189. GIFT Nifty will give you a quick sense of how we're likely to start. There's so many elements to this, right? But for now, it's about 50, 60 odd points lower, implied open at this stage. But F&O stats and how they're looking, Mangalam is standing by with that. Mangalam, over to you.
Well, it was a day of deep gash that we saw on Tuesday's trading session. The Nifty was down almost 255 points, taking away whatever gains we had made for August series and adding to the losses a little more. The volatility index, that spiked as well ahead of expiry and also ahead of the uncertainty that we saw in the markets. The Nifty closed below the 20-day moving average of 24,739. So on the way up, that will be the first mark to watch out for the frontline index. But importantly, it is the August series expiry today, the last Nifty expiry on a Thursday. More importantly, the Nifty has fallen 56 points in August series so far, with the GIFT Nifty indicating a 50-point downtick itself. Can we make up the deficit and at least close positive for the series or not is something that the bulls would be looking at after the 800-point decline that we saw in the previous series. The FIs, they continue to sell in the markets, 10,000 short contracts added, but more importantly, ahead of expiry, they've written way more calls than puts. Remember, on Tuesday's trading session, they had written a lot of puts, and those put writers were caught on the wrong side. Can the call writers be caught on the wrong side today or not will be the big question. 74,399 call contracts written on the short side. The put-call ratio at 0.72 is at the lower end of the range. Any commentary on trade resolution could perhaps spur an up move. And the 50-day moving average is at 25,013. That could be an important resistance to watch out for on the way up. The reason why I say could call writers be caught on the wrong side today, 24,750 call, 24,800 call and 24,850 call. All these three strikes on the Nifty put together have added 2 crore shares in open interest. So if the market does somehow sustain above the 24,800 mark, we could see all these writers go for cover. But importantly, not only is it the last Thursday expiry for Nifty, it's also the last day in the F&O for 8 stocks. So those are the stocks we'll be watching out for, particularly in the last 30 minutes of trade for any wild swings. AB Fashion and Retail, we have IRB Infra, Granules, Jindal Stainless, names like Poonawalla FinCorp and SJVN as well. The last day in F&O for these stocks.
Okay, all right, so that's F&O. Asian markets, by the way, are largely holding up. There's more green than red on Asian screens, but we have our own issues and our own woes to deal with. So let's see, we'll get the implied open up on the screen if we can before we move to the equity call of the day. So the Hong Kong markets are showing some red, but most of the other regional markets are holding up. And the suggestion is that we'll start another 50 points on the lower side and more hawkish commentary coming in from a lot of US government representatives. We'll get to that in just a bit. But first, the equity call. Vikash Jain of CLSA says a notable GST rate cut coupled with the impact from a ban on real money games and a likely miss in direct tax collection could pose a potential revenue loss to the central government equal to 22 basis points of GDP and a significant one for states. He says if the government sticks to its fiscal deficit target, we see clear risks of a curb in capex of both the centre and state governments. He says a half-hearted GST rate cut next week may force a retreat in the recent consumption rally. But a clear reduction may not only provide further impetus to consumption stocks, but would also be seen negatively for capex plays and other revenue sources like oil marketing companies. Okay, well, that's the CLSA call. But for now, just to go back to that hawkish commentary that Prashant was alluding to earlier, because the statements that are coming in from the US, they're not getting any better in terms of any potential climb down between the trade issues and the tariff issues between India and the US. White House trade advisor Peter Navarro cranked up pressure on India to halt its purchases of Russian oil, saying that the road to peace in Ukraine goes through New Delhi. Navarro added that India and China must stop buying Russian oil and that tariffs on India can go down by 25% if India stops buying Russian oil. Let's in fact also listen in to what U.S. economic advisor Kevin Hassett and U.S. Treasury Secretary Scott Bessent said on the U.S.-India relationship.
I think that it is a complicated relationship, that it's integrated some with the problems that we're trying to put extra pressure on Russia so that we can get a peace deal to save millions of lives, and the Indian intransigence about opening their markets to our products. And so I think that when you're looking at trade negotiations, one thing I think we've all learned is that you need to keep your eyes on the horizon and recognize that there are going to be ebbs and flows in things before we reach the final position. And if the Indians don't budge, I don't think President Trump will either.
President Trump and Prime Minister Modi have very good relationships at that level. And it's not just over the Russian oil. The Indians came in very early after Liberation Day to start negotiating on tariffs, and we still don't have a deal. I thought that we would have a deal in May, June. I thought India could be one of the earlier deals. And they've kind of tapped us along in terms of the negotiations. And then there is also the aspect of the Russian crude purchases, which they've been profiteering on. So there are many levels going on here. I do think India is the world's largest democracy. The U.S. is the world's largest economy. I think at the end of the day, we will come together.
Well, let's see. Well, that's what one hopes for, but we haven't seen any sign of that.